Hey, it's delayed, and this is episode 366 of the Orange Pill Investor. I hope the audio didn't die. I might have screwed it up when I switched from the laptop speakers to my AirPods. I got audio. Is the mic working? I mean, no shit. Oh, you can now, Buffalo. All right, good deal. Um, yeah, I did a little bit of troubleshooting with Restream last night because the YouTube comments weren't coming through. And of course, when we ran the test, everything was fine. So now I'm super paranoid every time I go live. Um, Appreciate you guys confirming that we are cooking with gas. What's up, Howard? What's up, Buffalo? What's going on, Tone? Cup holder. All right, appreciate it, y'all. Um, so the title of today's episode is "Your Feelings Are Bad, and You Should Feel Bad for Feeling Them." It's not something I came up with. This YouTuber named Ryan Stone likes to say it a lot, and it's definitely true in the market. So in November, I let this euphoria get away from me and failed to take enough profits here. Even if I didn't go to cash, like it seems like it should have been a no-brainer to just take all the long calls off the table. And if I still wanted to be long, it's fine to be long in spot, right? Like you don't have to have degen long call plays all the freaking time. And especially with my background as an option seller, that's like I was never long leverage from 2020 to 2024, really. Even my long calls were just deep in the money uh, tools that I used to sell covered calls against. So every once in a while, I would toy with some momentum plays, or back when COVID was running, and what was that vaccine company? Anyway, they were printing money, and every once in a while, I'd see the price running, and if they were hitting 52-week highs, maybe jump on a long call and just day trade it or something. But other than just toying around with little things like that, I was never leveraged up, especially like I am now. So this euphoria definitely got the best of me, and I want to review just this trade that I did yesterday. Even I wasn't emotional about it. But let me get rid of the chats so we can go full screen. I wasn't emotional about it, but I decided to close all of my 260 strike covered calls that got wrecked. I closed them yesterday, and the price was like 305, and it was trading almost like spot at that point because the delta was it was so deep in the money that it was like a point 0.9 delta or something. And since there was no extrinsic value left in it, I decided to close it early. And that probably cost me about $1,000 per contract and 8 contracts, because the price is now, well, maybe not 1,000, because the price is now 297. So I should have been able to close those for 37 instead of 45. So about 800 a contract. So 6 grand. Not the end of the world. And I'm going to stop just short of calling it a mistake, because it was a mechanical decision. It wasn't an emotional decision. If I was panicking because I saw the price running, if I was like, "Ah, shit," I sold these calls back when the price was price was like, whatever it was, 250 or something, right? And then I just immediately panic sold, or, panic closed it, and then the price comes down, and then you put the covered calls back on at 245, and then the price runs again, and then you panic close. You're just getting whipsawed back and forth. So I didn't do that, but I should have done game theory on all of the potential outcomes. So yesterday, when the price was 305, do I close it and pay the 4,500? What are the 3 scenarios that can happen? The 3 scenarios are that the price goes up, continues to go up, it can stay flat, or it can go down. By closing those out, and I added these t not that one, that's 2 days old. I believe I added these 2 yesterday. The only way for these to make money would be if the price goes up, compared to how much I spent on, to close the 260s. I would need the price to go up or stay the same. So I got paid, I guess really I broke even on these 2, and, um, and just about broke even on this one as well, because I'm gonna collect like 500-600 bucks in premium, which kinda offsets the $800 cheaper that I could have closed the 260s today if I had waited. And so really the big risk would be if the price did drop. And since it did drop about $1,000, oh, I'm sorry, um, about $10 a share, which is about $1,000 per contract, it turns out that the right decision was probably to have just waited till this morning and closed those at the last minute. I could have closed them all for, 800 bucks cheaper. If the price had remained higher, then it would it would have probably made more sense. But so I think it turned out to be the wrong decision, but at least it wasn't an emotionally wrong decision. I can stomach trading mechanically and with a plan and being wrong. That's perfectly fine. But panicking is kind of annoying. Um, I was kinda eyeballing, just in case Josh's 314 flannel channel prediction was correct, I was gonna try to close out as many of these covered calls as possible by next Friday, but I'm a little bit shook and kind of in my feelings, which I know I'm not supposed to do, about this strategic Bitcoin reserve announcement because they announced there's a bunch of talk about it yesterday, and of course, Bitcoin immediately tanked, which is hilarious. But then, it immediately recovered. So, we're right back where we started, basically. So, I'd like to catch this entire next pump, right? So if we get another March or we get another November, what's it going to look like? Um, we've got to claw our way back to all-time highs, and then we're off to the races. So let's go back to March. Uh, I don't know. Previous all-time highs were 100 way back in the frickin' day. And so it's probably okay to sell covered calls through here. And then once we got to 100 and we cleared that, then it was like, uh-oh, now we went for a double. Once we got past all-time highs, then the stock doubled. And then of course we went sideways, up, down, up, down, up, down, and then we cleared all-time highs again. 200 was all-time highs, and then we doubled. 2.5x at that point, because I think we actually topped out at like 500 after hours. So I have to figure out my plan. Do I want to catch the entire next rally, or am I okay with selling covered calls through, you know, well, there's no guarantee that we ramp up, but if we're going to double our previous all-time high, right? If we want to go from 500 to 1,000, we got to get to 500 first. And in just a week, strategy is up 30%. So I may throw caution to the wind and give myself one more week. Um, I know Josh closed all of his shorts already, and there was a rumor. I didn't see him posting about it. Maybe I missed it, but somebody was saying that he deployed some of his cash to sell puts. Um, but my timeline is so messy. I can't keep up with everything. So I'm not sure if that's confirmed or just a dirty rumor, which would be fine. It's no different than selling a covered call, really. The return on capital is nearly identical. So uh, selling cash secured puts, selling covered calls, I view them identically. It's a limited upside bullish strategy. So let's before I get into how much money I'm going to have to cover to close these, let me just deal with them. So this one is going to cost me 4 grand. Let me just close. Let me see if I can close all of these in one shot. I don't think I can close more than four in a group. Of course, they're working. All right. I don't know if I have desktop sounds off, but I believe those filled. Yeah. All right. Two more weeklies. And the other four positions, made a little bit of money. Not a whole lot. Oh, they filled. All right. That means I'm using 5 grand with a margin, and I got to figure out a way to pay for that somehow. Again, I think I'll wait another week on these. These have 28 days to expiration on them. I could deal with these now, but letting them go down to 28 might work. So maybe I'll target closing these six down, and then I'll figure out if I want to leave these 200s out there just decaying, or whether I want to take some of them off the table and potentially even replace them with some out of the money covered call, or excuse me, out of the money longs. These are still in profit, so that's nice. I might have to peel these off in order to get right. Um, all right, so let's just see how many covered calls I'm going to use this week. I've got 1,000 shares, and I have negative 736 theta. I don't think I'm going to come up with enough covered call selling to deal with that because I'd have to sell 6. I think I only sold 8 last week, so that actually might work. I only need to sell if I sell the 300s slightly out of the money, a little bit of upside there, I only have to sell, oops, getting paid 1,300 bucks, 4 of them. That's 5,200. That'll get me to, it won't give me a positive theta, net theta, but it will get me to no margin use. All right. Let's take a look. Yep, so my net theta is still negative. Should I sell 2 more just to squeeze out just a theta neutral at least account? That would be 2 more. Yeah. Gonna even go a little farther out of the money. That would need to be 120 each. Yeah, might as well just stick with the same. Let's do 2 more. So I sold 8 at the money covered calls last week, and I'm dropping that down to 6. So just, peeling away a little bit of short positions, and then we'll see what I have to deal with next week. So that gives me 3 grand to play with. If I buy shares and the price goes up, I can sell those shares to cover these positions. Um, but if I take some longs, those would allow me to cover even a little bit better because they'd be leveraged. The opposite is the case if the price crashes back down to 250 or 275 again, the shares won't get crushed, but the leverage will. If I add more leverage, then I'm going to end up with a negative net theta. So I think I'm going to add the shares back in. 11 shares. So the shares that I sold last week, if it's first in, first out, then I sold those for a loss, or excuse me, a gain. But sold against my true or my official cost basis, those might be considered a loss. So I don't even know if this will end up being wash sale rule or what. Did that fail? Yeah, that failed. All right. So last week I had, yeah, the web based, it has a new look to it. Still trying to get used to it. The accounts are on the right now. And this pane is minimized, but my pain has been maximized. Every time something changes, it's pain and suffering trying to learn it. All right, so I'm back down to almost no cash. I'm liking that, and we'll see. It's gonna be interesting to see what it's gonna cost me to close some of these out. But if I do, I mean, these longs are slightly in profit for now. These are down. These are way down. But yeah, I've got a few positions that I can close for a profit. And keep in mind, not tax advice, but I took some profits to cover the losses on those 260 covered calls that I had to close for a loss. And so that all just basically broke even. There shouldn't have been any capital gains to speak of there because if I take a $4,500 loss on that covered call and then I close $4,500 worth of long calls for a profit, that just all cancels itself out. So at the end of the year, that particular trade should work out pretty neutral. All right, I think that's it for this account. The big decision next week is whether I'm gonna, assume that we springboard up and do I just stop selling these weeklies completely? We'll see. All right, let's check the chat and then I will continue on. Buffalo, Josh is the only one from the future you couldn't have known. Yeah, man. Cup holder. I've also had a hard time selling specifically MSTR as opposed to other tickers in previous situations. Always so convinced my leaps could actually hit. Never know with Bitcoin. Yeah. I'm still bullish on basically every single long position I have. Even the ones that I bought 80 days ago in December when we were still feeling the euphoria from November and thinking, oh, this can go to 1,000. Um, well, maybe not the Junes. We do need a pump to probably back to, yeah, if we can get back to 500 a share, I might, by the end of April or March, by the end of the March, I might be able to break even on these or profit. But yeah, these will probably be losers, which will be a good lesson to learn. Not terribly worried about July, but the plan is to continue to roll these anyway if they're losers throughout 2025. If I can close them for profit, maybe I'll only roll a portion of them out. If we do get another spike, implied vol spike like November, I'll just take all my leverage off the table. I'm not carrying any leverage beyond a spike like this again. Maybe I hit it here and I miss the top. That'll be fine. It's much more it's much easier to deal with watching the price of spot collapse 50% than it is a long call collapse 75%, right? These Junes are down 75. Actually, that might be 80%. Yeah, like 85%, something like that. Yeah. So I'm not really worried about any of my long positions. as far as like something that can just sink, the entire portfolio. And that's why I'm desperate to keep this base of shares intact. All right, Howard says yes, he sold puts. Okay. And I think he had about 20 to 25% of his portfolio was in cash. So that kind of makes sense. Oh, so the 250s or 260s. Yeah, so if those hit, then he would get a pretty good entry position. I don't know if his intention would be to allow um that's kind of like a win-win situation, really, because either we're above 250 or 260, and I'm assuming he took the 314 expiration date, but I have no idea. So he either gets a really good entry position or we stay above that and he just pockets the premium. He said he tied up half his cash. Okay. What's up, Deeply? As much as I hate it, we only need look at equities, S&P, and Nasdaq to see what's dragging price down. Yeah, I saw some speculation. Jeff Park said that his interpretation of the administration's comments about who said it? Was it Lutnick or no Besant? Maybe there was some comment about there's no Trump put, but there's a call option or something, Trump call option, and Jeff took that to mean that Trump's just going to let the market fucking collapse and then swoop in to save the day and cause the biggest reversal in the history of ever or something. That's not a direct quote. That's not exactly how he said it, but um, you know, something like this dropped from that only dropped like 10%. I don't know how much they would have to crash it in order to get the Fed to really do something. So back in oh gosh, it's all the way. Wow, COVID is actually starting to roll off the 5-year calendar. It's kind of cool. So back in the day, we had the 300 to 250 collapse. That doesn't even seem like a big deal now. Why does this not seem like a big deal? This was the end of the fucking world back in 2020. S&P 500 was at 320 and it collapsed $60, so 20%, and that was enough to freak out and start printing like crazy. Wow, that's wild to me. So if we say that 6 was the high, 10% is 60, 20% would be 120. So if the market crashes to 490, then maybe the Fed will do something about it. Is that what's happening? If that does happen, yeah, temporarily, strategy, Bitcoin would get hammered. Um, and if they don't recover fast enough, if Bitcoin is still trading at these levels or below by the end of March, then I'm pretty sure that Sync Strategies battleship as far as trying to get into the S&P 500 on the first try. There's we I've been so hyped about first quarter FASB inclusion. Um, but once the clarity came out and we're not gonna we're not gonna be able to book the profits of the entire, you know, strategies Bitcoin journey for Q1, we have to have some profits in Q1. And right now, I don't think they are, right? Their average Bitcoin cost is probably in the 90s for Q1. Where's January 1st? Yeah, so it was 94. Yeah, the only Bitcoin that they could have bought under 90 was in the last couple of weeks, and they haven't been selling at the ATM. They had the one convertible bond, but they bought Bitcoin, I don't know, somewhere in the 90s, I think. So yeah, so they need, unless they can lower their cost basis and buy a bunch more Bitcoin cheaper, looks like we need somewhere in the 90s. I'm sure the Quant Bros have the real numbers, but tanking the market, Bitcoin down to 72 or 65, um, is not going to get strategy into the S&P 500 based on Q1 results. So that makes me nervous short term, but not long term. If they tank the market for a couple of months, the Fed will capitulate and they'll just print. And we know they have to print anyway because they can't afford the payments on the debt. So interest rates have to come down unless the Fed's really just trying to stick it to the Trump administration somehow. I don't know how that test of wills would shake out, but yeah, could be some short-term pain, but none of that changes, I think, Bitcoin's trajectory for the rest of 2025, if for no other reason than the announcement of the strategic Bitcoin reserve. Like even if they don't buy much Bitcoin, that's like the starter's pistol going off for the entire world. Like every nation on the planet has been put on notice. So yeah, I'm still a little bit paranoid about the gamesmanship and and politics that are going on behind the scenes that could, you know, tank the market on the short term. And as leveraged as I am, that would be a painful scenario, but wouldn't surprise me. That's one way to get rate cuts. Yeah. I'm gonna hold out hope that we get Josh's diving board spring and the major markets essentially pivot off the 200-day moving average. Yep, I'm with you there. So maybe this will be my last like swipe at aggressive, these aggressive weekly at the money covered calls. um, but I actually don't mind it because every time I'm forced to sell off some leverage for profit to cover these, it's forcing me to deleverage. Like I have too much leverage right now. So, getting wrecked on some of these covered calls and forcing me to offset by deleveraging, I'm totally fine with that. Like I still sleep okay, but sometimes you don't realize how good you'll sleep until after you de-risk. Because in November, I didn't take nearly enough profits, but between March and November, I was using margin. And there were a couple of earnings calls in here where Tasty changes their margin requirements 3 days before earnings. They increase that requirement. And so I ended up getting a couple of margin calls, not because the price went down or I was using an irresponsible amount of margin, but based on their new calculations, they were like, "Nah, you're using too much margin." So in November, I took enough profits at least to stop using margin. And even though I thought I was sleeping fine and like it just felt like a giant sigh of relief, like, oh, I have no, you know, I can't be liquidated now, right? And that definitely turned turned out to be a good decision because it was painful enough, having my account like 9x from March to November and then go back down to like a 3 or 4x. Like, watching all of those gains disappear over this last 3 months was painful enough, but if I was using margin and dealing with, like, would I have gotten a margin call here on this one, or would I have gotten a margin call here? That shit would have been stressful as hell. Um, but, maybe this is a gambling addiction, but when strategy was like 250, I was tempted to start dipping back into margin again, and I had to just remind myself that I f I didn't need to put myself in that kind of stress again, but damn, was it tempting. Alright, let's take a look at the rest of these accounts. I've probably got some other covered calls to deal with. You know what? I'm gonna take a look at MSTY. When is dividends happening again? So, I was clawing my way back, like, when we hit, like, 310, I was, like, $7,000 behind. I had been trailing them by, like, 20, 30 grand this whole time, as soon as Strategy's price started taking a shit, and, I was so glad to, like, be clawing my way back, but we're gonna get another freaking ex-dividend, and so they're gonna get another 10%, um, on top of that, and I'm just gonna be I'm just gonna be behind again, which is kinda hilarious, but, not really worried. Plenty of time left this year for a nice rally. Alright, this is the joint account. I don't have any weeklies in this account, so this one's been on for 10 days. I can easily keep this on another week or 2. If I close it now, I'd be buying it back for more than I sold it for. So I'm thinking I just stand pat at least until next week, and we'll see if I can, close this for less of a debit. Do I have any? Yeah, I have a couple of positions in profit that I can use. So if we're still trading above 300 next week, and I do want to close this position, it looks like I can peel off any of these September 1080s that I bought recently. Um, this December 380 is actually still in profit, so that's cool. But I've had that for 189 days. And this is the position that I'm using to sell. Actually, is that the position? That doesn't make any sense. Um, no, I actually think I've been selling this covered call against these 3 530s because that combination adds up to 121 delta, which is the equivalent of 121 shares. So that actually makes more sense. If I was selling a covered call against this position, it would have to be at least at the 450 strike, approximately, to be safe. So that makes more sense. So technically, I could sell one more covered call in this account, and if I wanted to be a true option seller, I should actually, since theta is negative. Why do I have cash? All right, let me at least buy some shares with this. What, 4 shares? I think I was keeping that cash just in case I had to pay to close a my short, but I like having no cash better. Oh, I didn't scroll down far enough. So here's 3 poor man's covered calls. These are structured okay. Yeah, maybe that's what I was holding on to that cash for. And then I've got one more covered call against these 3. And I guess if I wanted to be cute, I could sell like a 450, but I think I'll just stand pat for now. All right, my discretionary spending account. I've got one poor man's covered call. We'll see if I want to close this next week or just let it run. And then, yeah, my Septembers are at least in profit. If I have to pay to close something, again, I've got cash in this. I think I deposited some cash in this one. Let's pick up. Yeah, I'm thinking about what the price will be like in the future. And since this is just my spending money, I'm tempted to be a little bit more uh, frivolous with the money. So, oh god, but if I these are in profit, you know what? I'm just gonna buy shares. If I buy another 1080, then I'm gonna be like bringing my average cost up instead of down. Yeah, let's do 4 shares. All right, no cash. All right, no cash here as well. All right, so this is the account that I'm trading against, MSTY. I got to deal with this. This is expiring today. And if I had closed it yesterday, it at 305, it would have cost me 5 grand. So this kind of works out. By waiting until today, I'm able to close it for 2 grand cheaper. So I like that very much. This is, that the ones that I closed yesterday for 4,500. I could have closed them today for much cheaper, but I mean, you never know. Price could go up, down, or sideways. All right. This one must be sold against this one. I gotta come up with 3 grand. So, I'm trying to hold myself to almost kinda like a set of rules and trade this as if it was a, a yield generating account. So, I'm gonna go ahead and just sell an at the money covered call for next week. And I'll probably ignore any potential rally, right? I'm just gonna pretend like I have no idea what the price is gonna do, and it's all about just generating premiums. So let me I'm gonna sell the 300. That's not gonna quite give me enough to get out of margin use, so I gotta come up with another 1,800 bucks. 4 shares is only gonna give me 400. That is annoying. So let's sell them and see. Hmm. Yeah, I might have to sell one of my leveraged plays. What do I have? 4 shares? Yep, I still got to come up with 600 more dollars. And unfortunately, the only place I can get it is from these 1080s. And technically, that's selling at a loss. But them's the breaks. The only way they could come out and get more cash would be if I rolled these 41 days to expiration out to 48, which is an option. But let me look at my trade activity. Where's these 1080s I bought? All right, so Um, if I just look at the trade price, it looks like I'm selling these for a loss, but I did buy 4 1080s to dollar cost average and bring that cost down. So if I sell any above 267, I'm technically selling. I can look at it. If I want to twist my brain around and see it how I want to see it, I can say, well, I'm selling these July 1080s that I bought for 267 for profit, even though my average trade price is really $8. So, whatever you need to do to convince yourself that you're not a failure, just do that. All right, cool. We've got positive and we're just barely eking out a net positive theta here. Which is kind of funny because the net theta on this uh, was probably, just peeling this one off probably put me into the positive. So holding on by a string. If we see 250 again, MSTY will be once again wiping the floor with me. So I need like 325, 350 ish in order to put myself in the lead. That's kind of a guesstimate. All right, let's take a look at the 5K account. I've got the CLSK call expiring today. CLSK is at $8. Oh, I'm sorry, this is not expiring today. That's 4/4. Yeah, so I had rolled these out to 45 days. So nothing to do here, nothing to do here. These 417 calls are probably upside down. So I'll give these another week to marinate. I think I took a little tiny profit off of something the other day, didn't I? I saw one of these. Yeah, I sold one of these for 600 bucks. Almost a double up on profit there. So I give myself a little bit of buying power. Hmm. How do I want to spend it? So Wolf is down to $3. I could sell like what do the options look on Wolf? Let's see if I sell cash secured puts for next week. the the profits are so small when you're dealing with stocks under $10 a share. But if you look at this, a 1% return on capital would be 3 cents. So 9 cents is, 3% returns for 1 week. So that's not, it doesn't suck. Now you're not going to really be able to get that though, because the bid ask spread, the mark price is 9 cents, but I might only get filled for 8. And then if I have to close this position next Friday, it might be even worse. I'm gonna have to pay $1 to close that contract, or just I could just let it expire worthless and not pay the dollar. But let's just see how much other stuff costs. What's Riot trading for? $8. I think I had. Wait, didn't I have? How much cash did I have to spend? That buying power is a lie. Yeah, 890 bucks. Okay, so I could actually sell. What's what's the other one? CLSK is around 8. And what's Hut doing these days? I think the liquidity on Hut is poor. Hut's probably too expensive. Yeah, 12 bucks. All right, selling an $8 put for next Friday for Riot's going to get me almost 50 cents. Selling the $8 put on CLSK will only give me 43 cents. So let's sell the Riot and get paid more for the same. Well, the only reason it's getting paid more is because the share price is about to go below 8. So probably doesn't matter which one I use. Okay. There's 100 people bidding 47, and I'm sitting here lonely trying to ask for 48. Come on, market makers. Are we really going to argue about 1 penny? I guess we are. They're calling my bluff. So now I got to go all the way to 46 probably if I want this to clear. Let's try 47 now. Now I'm chasing. I'm gonna try 47 one more freaking time. Nope. No can do. Okay. The only resource, true precious resource you have in life is time. So it's worth $1 to get on with it. However, on a small account, I mean, sometimes those pennies really add up, especially when you're trying to sell cash secured puts on a $3 stock and the profit is $9. You know that $1 is 10% of your returns. So, why is this $6 call worth nothing? It might be the bid ask spread. Yeah. Okay. If this was truly a $1 contract, I should close it, but it's really just poor liquidity. All right, nothing to do there. All right, looks like I'm done. I'm gonna check chats and then we can uh we can call it. Subtone MSTY X dividend date March 13th. So whoever wants to be paid this month must buy on March 12th or sooner. Yep. So get in there and get it while the getting's good. What's Misty doing right now? The frick? Over here taking screenshots for no reason. Yeah. So if the price holds at 20 and we get another 10% ish dividend, that'd be about $2 a share. So yeah, I should expect another 14 or $15,000 payout on my 7,895 shares. Yeah, that's gonna put me farther back in the race. Unless strategy is sitting at like 325, I might have a chance. I probably need 350 to catch back up after they after they get paid another 15 after this account gets paid another 15 grand. And I believe I have dividend reinvestment set up correctly this time, so it should just automatically purchase these shares for me and there won't be any cash. I guess I have $8 in cash. So that'll be fun. I was kind of excited about Bitwise's product that Jeff Park alluded to. He said it was coming out in March, but then when I went to their investor page and I saw the products that they offer, and I didn't realize that they actually are not Bitcoin only. So that kind of turned me off. I'll still take a look at the product if and when it does come out and see if it's better than MSTY. But I'm kind of annoyed with companies that deal with shitcoins. I'm a little even frustrated with Tasty Trade because, you know, you can buy and sell Ethereum on this damn thing. Um, whoops. So that's annoying. But I still have a lot of loyalty to Tasty Trade for all the free content that they put out. And they're just pure tradfi market people. I don't think they have the slightest idea the difference between Bitcoin and crypto, which is unfortunate. But if I ever get a chance to talk to Tom, maybe I'll put a bug in his ear. Deeply looks like Josh bought some April 4th 320 calls, September 19th 325s, and May 16th 340s. Okay. He's pretty aggressive with that April 4th. That's only 30 days out. That's already in, those are like in my I've got like covered calls, around that time. That's hilarious. Um, that's only 30 days out. A lot of people sell 30-day covered calls. What's the lowest strike I have on my covered calls? Okay, the weeklies don't count. Poor man's covered calls, I got the 325s. So he's selling, no, excuse me, he's buying. That's hilarious. We could not be trading against each other any harder at this particular moment. Um, I mean, I am looking to close out these positions by next Friday, so we'll see if I can swing that. But that's fucking funny. So he literally almost is long the exact same expiration and strikes that I'm short. I mean, I guess we could technically both be right if the price is 322.50 on April 4th. Um, my calls would expire. My covered calls would expire out of the money, and his long calls would expire in the money. Of course, 322.50 is not going to be enough to meet his break even. He's going to need, if he's paying $20 a contract for 320s, maybe 15 a contract for 320s, then he needs the price to be 335 or higher to be in profit. So if I don't if I don't take these off by next Friday, then we will have opposite trades in place. That doesn't make me feel very good. Having literally the opposite trade of old Josh. That's an unfortunate. It feels like an unfortunate situation to be in. Uh, but luckily, these are the ones that I would be looking to drop anyway. What else does he have? September. Okay, so April 4th, September 19th. So he's exposing himself to a bunch of delta and gamma here. He really, he's really thinking there's going to be some price action at least by the end of March. So that's fucking bullish. I like that. That's making me feel good. Um, and to a certain extent, like even if I don't take these off, it's actually fine. It's completely fine. And if he's right and we're at 350 a share, 400 a share by April 4th, if these get completely fucking annihilated, it's completely fine because these 200s are in profit and they will be in even more profit if that happens. Now, my max profit between now and then on these would be capped at 325. So between the current price, that's about 4 grand. So if we do get a rocket, these 6 poor man covered calls have a maximum profit between now and then of about $4,000. Because I'll profit from 285 to 325. That's 15 and 25. Yeah, 40. $40 a share. So about $4,000. And then above 325, these short calls, that's what limited upside means. I can't profit above 325. So I stop profiting, but the 200s would continue to profit. And since the delta on it is 0.8, and by the time we get to 350 a share, these would probably be 0.85 delta or 0.9 potentially. It's going to start behaving much more like um, spot strategy shares. So it's perfectly fine. It's not like these are naked calls. And if Josh, wins the lottery on his 320s, I'm not going to lose infinite money here. This is the defined risk trade because I have my poor man's covered call structured correctly. But yeah, if we get to 350 a share, then I would be losing about 2,500 per contract. So, I'd be missing out on about 12 grand. If we get to 400 a share, I'd be missing out on 7,500 a contract. 6 times 7, 42. Yeah, about 45 grand of upside I'll miss out on if we get if we break out of the flannel channel or well, I can't remember what fucking metaphor we're on right now. We got the channel, we got the diving board, we got the rocket, we got King Kong on the top of the Empire State Building. We got all kinds of good shit. Josh Mandel metaphors are not priced in, that's for sure. So I'm gonna try to take off as many of these as I can by next Friday, if possible. But even if I don't, and we get lift off, it's fine. It's totally fine. Patrick says my face when I sold a call to Josh. Yeah, that's brutal. If that motherfucker had the 325s, I would have shit myself. That would have been that would have been a roast worthy just pit in my stomach right there. That would have been but yeah, having the 320s is still still too close for comfort. You pat yourself on the back. You know what? There's a meme about that too. There's a kid and like his dad or his grandpa, and they're like they're day trading or something next to each other on their computers. And I think it was the father was like bragging about how he just bought something from somebody, and then the kid was like, "Oh yeah, I just sold those." Anyway, I have to try to find that meme. Buffalo Strike goes ex dividend next week as well. I'm actually pretty excited about it. Actually, yeah, that's pretty. You know what? Let's take a look at that because I might need to. I know some people are using Strike as their dry powder. So when I'm selling my premium and then buying shares or whatnot, I might want to consider buying some Strike instead because this is going to be less volatile. And so you said the ex dividend is next week. Interesting. So it's 8% a year. So quarterly, we're going to get $2. Is it $2 a share or $2? Two. It's not 2% of the share price, right? It's gonna be $2 a share, right? Um, yeah. So buying 100 shares would cost 9 grand, and then $2 a share, 200 bucks. Yeah, it's pretty cool. Gonna be earning some interest on dry powder instead of just letting it sit in cash, and it's already appreciated from the initial offering was at 80, right? So it's up almost 15% from the open. Where's the chart? Hmm. Yeah, I got to think about this more. Surprised they don't put the dividend date up here, obvious, someplace obvious. Strike dividend $2 per share flat. It's only 8% a year if the price of strike is $10 flat, but it'll move. Mhm. Okay. All right. We are all caught up and still as bullish as ever long term, like trading through 2025. But, anything can happen short term. I mean, hell, anything can happen long term. I'm just not worried about any of the longer dated stuff. Yeah, $100 per share. Exactly. All right, cool. Be good, y'all.